Hello, good morning everyone. You're shouting at me? You better watch your freaking mouth, okay? Hello, good morning everyone. Hey boss, good morning. Hey, what's up? How are you? All good. Yeah, your coffee's on your desk. I got your coffee and a croissant. No worries, no worries. All good. Listen, can I ask you a question? Remember that we spoke last week about that bonus? Yeah, I'm in a bit of a bad financial situation, so if you could actually help me out, I would really appreciate it. Hello everyone and welcome back. My name is Dan and as always we're going to do a weekly overview of the markets, what's happening in crypto world, what's happening in stock market world. There's a lot of interesting things at the moment. We discovered that Fed actually increased interest rates by 25 BPS or basis points, which brings us at 5% interest rate hike. And they were actually quite bearish. Jerome Powell was quite bearish. He said that they do not plan on cutting the rates this week, but the market disagrees. The market actually already priced in rate decreases or cuts by I think June or July, I'm not even sure. So guys, the picture isn't looking that great, and the bearish comments from Powell actually didn't push the market as high as we expected. But let's go over the technical analysis first, and let's see where we're sitting at now, where all the cards are displayed on the table, and let's see what do I expect from the next week moves. As always, let's head to the PC and start with Nasdaq 100 technical analysis. This is of course weekly chart. We always start with the weekly chart. Okay, on the weekly chart, as you can see, we managed to go above this supply zone, but we did not manage to close above it. We tested it and we managed to flush some stop losses over there. Probably a lot of people got stopped out who were trying to short it, and we actually closed just within the range over here. The next move is not that really predictable, to be honest. As I already told you, let's zoom in on the one daily chart. I mentioned to you that we might range in this zone, which we're actually doing, okay? Look at how the whole week we were actually ranging in this zone. We tried 2 times to break it and stay above it, but we didn't manage because Powell was very bearish, and as I've told you, jobless claims were actually really strong again. So we didn't manage to break it, but we are still holding on strong in this bullish momentum. You can still see that we ended up weak in green. However, I don't like these wicks over here. I really don't like them. But anyways, let's not lose hope. We might continue the bullish momentum from here. Now, what do I see from the indicators? As you can see on both MACD and RSI, we have a bearish divergence, okay? Which is not a great sign. Basically, the MACD and RSI are telling us that we might have a pullback to the downside. And if that happens, minimum pullback that's going to happen is going to be at this zone of 12,700. And then if we break it and go lower, most probably we will retest the EMA 200, EMA 20, which is around 12,500, just to go back, retest it, and then either go back in range or break it above, or I don't know what's gonna happen after. So the indicators are initially telling us to expect a small pullback. All right, now as always, this is just a technical point of view. We don't have many big news happening next week. There is some important data that's coming out, which I'm going to talk about later on, but there's no big news coming like the previous Fed interest rate hike decision, which as I've said, it's been determined already. We know all the information. Now it's just up to the market to absorb this information and to react accordingly. What we need to do is just follow the trend. And to be perfectly clear, we will not be turning fully bullish until we break this area over here, and until we break it with strength and go minimum to 13,200, pull back, and then continue all the way to 13,600. So until we break this area over here, we will not consider that we are actually still in a bullish scenario. Let's go over now 2 scenarios, which is of course bullish and the bearish one. And we'll start with the bearish scenario because we have this bearish divergence. So if the bearish divergence plays out, that means that we're going to come back all the way here to 12,700, then maybe break it to 12,500, retest 12,700, and just go back down to 12,250. So this is kind of a bearish scenario, okay? Now, in the bullish scenario would be something like, boom, just break with strength immediately all these levels to around 13,250, come back maybe to retest it to around 13,000 and then continue the momentum all the way to 13,600. So this is the bullish version. Now, which one of these two will play out? I'm not sure. As I've told you, the technicals on Nasdaq are telling us that we're gonna go down, that we're going to have a pullback. If you want to take some short trades, definitely take them off of these levels over here at around 13,000. So even if we push higher, try to take some scalps to the short side from this area over here. Maybe you catch 100, 200 points or so. And if we, as I've said, break it with force, do not try to short it, because you will get destroyed. Nasdaq is very famous for destroying short traders. Now I'll zoom in a little bit further to 4-hour chart, which is actually giving us again a big bearish divergence on both MACD and RSI. And as I've said, the perfect entry point for a bearish scenario would be somewhere over here in this area to a pullback of, first of all, 12,700 and then 12,500 or so. Now let's move on to 1-hour chart. So on 1 hour, the things are looking kind of the same. So yeah, there is this big bearish divergence as well. Guys, anyways, on every single indicator, on every single time frame, we are seeing this bearish divergences. So honestly, I do think that we should expect some kind of a pullback if the momentum doesn't keep up. So my suggestion to you would be on Nasdaq, pay close attention how we're gonna react to 13,000 area. If we start to slow down and not have the momentum around the 13,000 area, if we don't break it with strength, like really hard, like one big green candle to 13,100 or something, I would suggest you to be short oriented and look for the first sign of weakness, something like happened here, first sign of weakness, to short it back into range. And then of course your target will be somewhere around I don't know, 12,700 or so. So you can actually make quite nice 300 points. But if we break it with force, then as I said in the first place, do not try to short it, you will get destroyed. Also follow the news, see how the market will react according to news, and just adjust your trades according to that. So to sum it up, for Nasdaq 100, I see both bearish divergences on MACD and RSI. I do expect a small pullback, minimum to 12,700. If we manage to break it, then back to 12,500 or so, just to go back into range. And in the bullish scenario, of course, just a big break to the upside to 13,200, come back, retest it, and then go all the way to 13,600. But all of this will have to happen with the right momentum and with the good news. Now let's move on to Bitcoin. Bitcoin weekly chart, okay? I draw some more things over here and I'm going to explain to you. So on a weekly chart, we don't see anything much. Basically, we're just sitting in the middle of the range, in between the 25k and the 32k. No big news, nothing is happening, same like with the stock market. But what did I draw on a daily chart is this diamond pattern, okay? This diamond pattern at the top is considered bearish. So I actually drew these lines. How do I expect it to behave for you? This is something that I've noticed, and it actually does not look really good. We had some nice momentum over here, but we just can't stand above it and above the 28k. And in order to be still bullish, we need to remain above 28k and go higher, break the 29k or whatever was the previous high. However, at this moment, if any bad news are coming, this pattern will play out. So pay attention to this pattern. If you see a sign of weakness and if you see these big wicks, as you can see it right over here, be careful. Do not try to go all in at once, but slowly build up your short position with some calculated stop losses, okay, in order to profit. So if, let's say, you're building a bigger position, what I would do, I would suggest you to put your stop loss somewhere, I don't know, at around 28,600 or so, and then slowly build up your position with a take profit of 25,000. So that would be like, so let's say 3-to-1 risk to return ratio, more or less. Now, besides that, what we can see as well is on a daily chart is this bearish divergence on, again, both MACD and RSI. Okay, so we do see this bearish divergence on both of the indicators, which actually confirms to us that this diamond pattern bearish scenario is likely to play out. So for Bitcoin, I would suggest follow the momentum. If the momentum is very strong, go with the trend. If the momentum is strong, always follow the trend and always follow the momentum. If there is some good news, always follow the news. News and fundamentals always override any type of indicators. But in this case scenario, everything is telling me that Bitcoin is going to see 25k before it's going to see 32k. I'm actually quite bullish on it, and I would love it to see 32k because I think that in this previous pump we should have actually have the momentum to go to 32k, but we just didn't. So don't get carried away, always be calculated with the risk. And let's zoom in even further to 4-hour chart to see if there's anything on the 4-hour chart. So on a 4-hour chart, again, we see this big bearish divergences on both MACD and RSI. This does not look great on a 4-hour chart. This pattern over here, this double top or whatever you want to call it, does not really look nice to me, and I would not be taking any long positions at the moment. I wouldn't be confident in doing so. Let's zoom in even further on a 1-hour chart, and on the 1-hour chart we see this squeezing triangle over here, right? So it can go either way. We tried to break above it, but then we just went back in the range, and honestly I do not see any reason to be long at the moment. You might actually long it right over here from this area of 27,500 to long it all the way to 27,900, which would be kind of like 400 points or so. If you're a day trader and if you want to buy, then you should be buying it somewhere off of that area and just do quick intraday trades. However, as I've said, we need the clear momentum. We almost had it today, but then it was just a false break out of this area over here. Let's see how it's gonna play out. As I've told you, with the right amount of news and with the right momentum, we can actually push to 32k, but it does not look that way at the moment. So to recap, Bitcoin, I've noticed this diamond pattern, and all these huge wicks do not give me a bullish momentum and bullish confirmation. I would actually be bearish, and I would actually take a short trade with a calculated risk of, let's say, stop loss at around, as I've said, 28,500, and I would actually ride it all the way to 25,250. In this area, I would be taking my profits, or somewhere along the way, whatever you feel, depending on your size of your position. And most probably this is what I'll be doing. However, if the momentum is strong, once again, and if we manage to break this area over here and push all the way to 32k, just don't fight it. If we break the 29 area over here, don't fight the momentum, just go and ride along with it, flip bullish if you need to flip bullish, and that's about it. Now let's move on to economic calendar for next week. I'll be going very quick now because we don't have much to say. Monday there's nothing. Tuesday there is a CB consumer confidence, and then on Wednesday nothing much as well, pending home sales and Fed bar testimony. Listen to the Fed bar testimony, always pay attention to the Fed. On Thursday we do have GDP report for quarter 4, and this is the final report, which actually came lower than expected, because the first one was very good, the second one was actually lower, and now the third one, we'll see where it stands. If the report is actually bad, that means the US is very likely to go into recession. I mean, it already is, but okay, officially, right, whatever. So pay attention to GDP. If it's bad, probably the market will go down. And then, of course, as always, initial jobless claims, pay attention to that. As you can see, the jobless claims do not fall. Like last week we had 191, which means that the people aren't applying for jobless claims, that people are employed. Of course they're employed. I mean, they have to work like 2-3 jobs in order to pay their rent and everything with these high inflation and the prices. I mean, it's just insane. Anyways, and then we have Secretary Yellen speaks. Of course, she will make some turmoil in the market as well after the closing. And on Friday, we will have the most important report for the Fed when it comes to inflation, which is PCE price index. Okay, pay attention to PCE price index. If it's of course lower, it's good. That means that the core inflation is coming down. If it's higher or the same, it's going to be really bad. So basically the reports on Thursday and on Friday will be affecting the markets the most. So the beginning of the week shouldn't be having too much of a momentum or shouldn't be having too much of volatility, because there's no big news happening on Monday. Now let's move on to some news. Fed's Kashkari says that banking stress brings US closer to recession. Now he noted what's unclear for us is how much these banking stresses are leading to a widespread credit crunch. That credit crunch would then slow down the economy. This is something we're monitoring very, very closely. Kashkari, who has been amongst the most hawkish Fed policymakers in advocating higher interest rates to fight inflation, said it remained too soon to gauge the size of imprint bank stress will have on the economy, and therefore too soon to know how it might influence the next interest rate decision on the FOMC. Basically, Fed Kashkari, as the article says, he's one of the most hawkish or bearish Fed members. He was very strict, which he should be, which they all should be, in fighting the inflation, right? He was always fighting for the bigger increases. He's saying that the banking stress test will probably bring US closer to recession, as again I have told you guys so many times, we're already in a recession. They just don't want to admit it, okay? They just don't want to admit it, but we're already in a recession. The banking sector actually imposed a lot of stress onto the US economy, and probably we'll see implications of that later on, because they are just printing money like crazy, like there's no tomorrow, and putting it back into the system, which is temporarily good for the markets, right? But it's actually bad in the long run, because inflation will not go down, and then probably we might see a new lows or another bottom in the I don't know when, and that just prolongs the story about the beginning of a healthy bull market, which is what we all want to see. The perfect ending to this story would be get rid of the inflation, hike the rates now, keep them high, let the economy suffer, maybe put us into a small recession or whatever, but then you start next bull run in a healthy way, which means that the economy is now sustained enough, the jobs are again growing back, people are hiring, the interest rates are cut, the inflation is down back to 2%, and you start the bull market in a healthy way. But if that doesn't happen, if they just continue printing money and then start cutting rates, and then the inflation goes wild, and then people start buying stocks, and everything just turns around and people think we're starting the bull market and buy into it, and then they get trapped and then destroyed, okay? Like, this isn't a healthy way to start the bull market. A healthy way is when the inflation is back down to normal levels, when the job market is still strong, and when we're doing the quantitative easing or cutting the rates. But we'll talk about all of these later on. I've wandered too far. What's gonna happen in the future, we don't know. Now let's move on to some crypto news. Do Kwon faces fraud charges from US prosecutors hours after arrest. Do Kwon has been arrested in Montenegro, and he is currently in jail where he belongs, and I hope they extradite him, and I hope he rots in jail forever, because this mofo, he scammed so many people, he destroyed so many lives. This guy literally had a bigger Ponzi scheme than the most famous Ponzi scheme, which is Bernie Madoff's Ponzi. He literally lost around $60 billion or something for the investors, and this guy should rot in jail, of course, as the rest of the scumbags. Now this is good news, right? This is bullish. But aside from that, we don't see any other big news happening in crypto. We will soon have the Shanghai update for the Ethereum, and in April we should be starting the distribution of MTGOX. This is one of the big exchanges that collapsed long time ago, and the distribution of the money to the investors should be happening now in April. So basically they will be getting their crypto back and their money back, and a lot of people will use this opportunity to actually sell, because they've been waiting for the settlement for so long. I don't know, it's been years, I'm not sure how long exactly, but we might see another confirmation of the bearish momentum, because Shanghai upgrade for Ethereum is when the staking unlocks, and it will be regulated and staking unlocking, which means that you will be able to sell your staked coins that you actually held for a certain period of time. But of course they will not unlock it and give immediately everyone the opportunity to sell, because that would just crash Ethereum price for probably a lot. And another thing is, most probably a lot of people will not sell it because they maybe bought at certain different times, and maybe they just want to keep it, the Ethereum, they believe in it. So we might not even see a big implications in a bearish case scenario for Ethereum. But that, together with the MTGOX people who are just waiting to get the money to sell crypto and to get something back, could actually create the momentum for crypto to go down in a short-term period. Now, will that happen? We'll see. April is just around the corner, and we're gonna see how the market will react. That will be all for today's video. Do not forget to subscribe to the channel, put a notification on, like the video. As always, if you want to support me in making these videos on a weekly basis, I have a lot of news coming, so stay neutral in the next week, stay safe, follow the trend as always, and try to make some money. And if you find this analysis helpful, please comment down in the below, or maybe something else that you would want me to make, as I was making the tutorials before. before this. If you want to see something like that in between, I'll be glad to explain to you and to make a certain video. Now I'll see you in the next week, and until then, enjoy.